Hey everybody, and welcome back to another video. This one will be about Palantir and how they make money. Currently, the stock has been on quite the downward trend, as most growth and retail stocks have been. If we look at the past 6 months, we'll pull up the year. I think it's only been public for about a year. We'll go back to 6 months a little more detailed. But peaked out in February about $40 and is now under 1847. So, is this stock a buy? What should you do with it? This stock, or this video will kind of give you an idea of what is going on and how they make money. So, first, you look at the market capitalization. It is almost $34.5 billion. That may seem quite substantial for a lot of these retail investor stocks. They tend to be towards the single digit in billions, or maybe 10 billion, or not quite as rich in the valuation. But this company just went public recently, but has had quite the history of private and government contracts. So just in 2015, they were worth over $20 billion of a private valuation. These were just from government contracts and what they were earning privately without being on the public market and having the availability of public investing and public equity. So it has only increased in about almost $15 billion in 6 years, which seems like quite a lot, but their progress has been immense. We will get into kind of what they do. We will go to Palantir and we'll look at their products. Right now they have 3 products. I think they just launched Apollo. So the first one is Palantir Gotham. Integrate, manage, secure, analyze, and enterprise your data. This one they offered to I think it was every S&P 500 company during the pandemic in March when the crash happened, just to kind of increase supply chain efficiency. Sorry, there, I couldn't get it out. And just being able to run their company more smoothly with so many bumps in the road. And it really, really helped a lot of people. They offered that for free for the S&P 500. So 500 companies that are potential partnerships in the future already. And they gave it to them for free. Hey, try our free trial. See if you like it. See if this is something that improves your company and makes you money. This is where my very bullish thesis is on in this company. They are able to get a substantial amount of TAM, total addressable market, by doing this. Before, they had a hard time trying to find people who would need their product and need, or just trying to find advertising. It's a very, very opaque company. There's not a lot of transparency. It's kind of hard for people to figure out what they do and how they make money and how much they really should be worth. And a lot of this is kind of because they work with a lot of top secret and information that can't be shared with the public due to government regulations and just the government in general. But this is a great way to get some notoriety around Fortune 500 companies and get their name out there. And if the majority of the people that they offered this product to, or the majority of companies that they offered it to, keep coming back after they remove the free trial on it, they can make a substantial amount of money. So they will definitely expand outside of the S&P 500 and even smaller companies. And just, honestly, any company can use this that has a digitized and data that they can work with, because they use artificial intelligence and artificial learning and advanced learning that will keep getting smarter over time and will become, it already is more intelligent than humans and can analyze data way quicker, faster, and come up with better solutions than a human would anyway. and they're offering this free to every company in the S&P 500 as a free trial. So obviously they're not going to pull out the rug on them and say, whoop, now that's going to be $5 million for all of you. And then 5 million times 500 million in revenue. But they're going to be doing it slowly. Say, oh, well, maybe since we're saving you so much money, it will cost this small fee, kind of like what Netflix did in the beginning. I think it was $5 a month for Netflix. And slowly over time, as they scale their business out and start saving more and more money, and Gotham is really, really running their business and they're relying on it, and they kind of can't picture running their company without it, they say, hey, well, maybe we charge it a little bit more since you guys can't really do anything without it. Maybe it goes up a little bit in price. And the price just keeps going up over time because it is so important to all these companies. That is where I see the Gotham going. Foundry amplifies and extends the power of data integration. I'm not sure if they offered both of these to the companies, but this is just another way to enhance your digital data and really kind of increase the efficiency of their company. That is really what they're trying to be doing, is make companies run more smoothly with less supply constraints, less order constraints, and just figuring out how much to order of products, how little to order, how much we should put out on the market. Just honestly anything. They are just very multifaceted and have a lot of nuances that you could use this product for. And then Apollo, which is a newer product. It powers SaaS in places where no SaaS has gone before. That's pretty vague. I don't know too much about that one, but those are about the two Gotham and Foundry products and how they will make money. If we look here, it went down almost 6% today. If this continues to fall, I will definitely be buying more. I already currently have a position in this company, and I am a long-term believer. If it continues to fall, I will be buying more and more heavy. And if you made it this far, thank you for watching. Have a good one.